We're delighted to have you as part of the Willows community, at least for the next hour. As many of you know, our mission at the Willows is to nurture a grace-fed community of compassionate and forward-thinking Christian Scientists dedicated to boundless spiritual growth and service. That forward-thinking element of our mission is the basis for our Thinking Forward series of interviews, which my predecessor as executive director, Todd Herzer, launched in 2021. The goal is to deepen the Willows connection with ideas and events in the world beyond the gates of our lovely 20-acre campus here in sunny, well, at least usually, California. You can't have an interview series without an interviewer. Ours is David Cook, who moved to the Willows with his wife, Linda, in 2017. He now serves on the Willows Board of Directors. David joined the Christian Science Monitor staff in 1969 and served as editor of the Monitor from 1994 to 2001. During that time, the Monitor's website was launched and the paper won the 1996 Pulitzer Prize for International Reporting. After his term as editor, Dave served for 15 years as the Monitor's senior editor and Washington bureau chief. One of his assignments was hosting the Monitor's Washington newsmaker breakfasts, presiding at 672 of them. 672. The bipartisan guest list included Joe Biden, Barack Obama, Jimmy Carter, Colin Powell, John McCain, and Mitch McConnell, just a bunch of lightweights. So Dave, to think I've only known you as a member of the Zoom committee at church. Who knew you had chops like this? Certainly not me. So Dave, over to you.
Thanks, Steve. Our guest speaker this evening is Paul Collins, who's joining us tonight from Delray Beach, Florida. Some of you may remember that Paul was our guest in November 2020. We invited him back to get his insightful and inspired observations on recent economic developments which could affect current and potential Willows residents. Paul is president of American Trust Investment Advisors. It's a firm that provides investment management to individuals and institutions, as well as running a socially responsible mutual fund. In the full disclosure mode, American Trust manages investments for the Willows Foundation. Paul's company is also a longtime, extremely consistent Monitor advertiser, which warms my Monitor retirees' heart. Paul graduated from Ohio Wesleyan University with a major in economics. After college, Paul worked in the Mother Church's investment division for 8 years. Then he joined Boston's State Street Bank as a senior trust officer, managing over 300 trusts. He also served on State Street's Investment Policy Committee. In 1991, Paul launched the predecessor to his current firm, one of whose goals is growing your assets without compromising your values. So Paul's well equipped to discuss tonight's topic, the promise of God's economy. Before we move to God's economy, here's a brief scene setter on the outlook for the American economy. As Mrs. Eddy wrote, there is always some tumult, and that has certainly been the case lately with the US economy. Markets have been shaken by the recent failure of 2 regional American banks and the emergency merger of a major Swiss bank. The Federal Reserve had been worried about rising prices and was boosting interest rates to help tame inflation. Now, the Fed has to balance that goal with bolstering the financial system. Economic experts, including our guest tonight, have warned our country might enter a recession this year. Some forecasters say that the banking industry turmoil has already made a recession more likely. Earlier this week, the Axios news site called the economic outlook fluid, fast-moving, and uncertain. Whatever the future holds, the economic future, people in the Willows target demographic, ages 55 and, as we say, better, face several financial challenges this year. One is that the stock market sank almost 20% last year, meaning that many retirement nest eggs have shrunk, thus providing less investment income to cover this year's expenses. Another challenge is inflation. This year, retirees got the biggest boost in Social Security checks in more than 40 years, but prices continue to climb. The Federal Reserve's preferred measure of inflation rose at a 5.5% clip last month. So thinking about the economy from a metaphysical basis is probably the place to start tonight's conversation with Paul Collins. And as you know, Paul, the advertised topic for tonight is the promise of God's economy. And given your economic expertise and your background as a student of Christian Science, can you share some thoughts about approaching economic uncertainty and investing from a metaphysical basis, encouraging poise rather than panic?
Well, David, thank you. And thank you, Steve. This is a privilege to be working with the Willows again. The Willows has this extraordinary history of supporting the Christian Science community, and I'm glad to be a part of this forward-thinking series once again to support that work. As David referred to the economy, we seem to be about to hit a negative cycle. We've seen a nice strength in the economy over the last number of years, but due to rising interest rates from the Federal Reserve Board, there's this theory that we're in for a downward part of our cycle. So I think that's the first place to start when we're thinking about the economy and how to think helpfully about it. The first challenge that I would like to throw out is that cycles are man-made. They're exacerbated by human emotions, fear and greed. Cycles are not a necessity. Even economists will tell you that there's no reason why we can't continue to have an economic expansion. Now, many will argue that recessions clean out excesses, and that's a healthy thing. But I would suggest that recessions also end up with unemployment and making people struggle. So it's something that we need to find a solution to. So the ups and downs of the economy reminds me of a friend of mine who would jovially say, "I am an excellent ski jumper. It is the landings I have trouble with." So here we are. We're dealing with the landing. Cycles have their ups and downs, to say the least. So maybe we start there. Is man subject to the whims of economic cycles? We have this assurance from the Bible of the constant, consistent care provided to man. From the book of James, a familiar quote: "Every good gift," it's in the lesson this week, "every good gift and every perfect gift is from above, and cometh down from the Father of lights, with whom is no variableness, neither shadow of turning." And from Unity of Good by Mary Baker Eddy, "The so-called appearing, disappearing, and reappearing of ever-presence, in whom is no variableness or shadow of turning, is the false human sense of that light which shineth in darkness, and the darkness comprehendeth it not." So one more quick paragraph, David. I found this so helpful. To me, it draws a picture of the constant light shining, leading humanity that does not waver. Sir.
Thank you. So let me, going a little further, Paul, several years ago, you wrote a Sentinel article entitled Rethinking the Pursuit of Wealth. And the article mentioned the idea that substance can pursue us. That line, that quote, refers to a 1904 letter from Mrs. Eddy to a church in Colorado whose generosity towards the Mother Church Building Fund she was applauding. Being pursued by your substance is not something we hear about every day. Can you talk a little bit about that? What does it mean?
Yeah, it's a great story. So as you say, David, a church in Colorado had been assiduously working on building their own building fund. And they heard that the Mother Church needed funds in building the original. So they took their entire fund and gave it to the Mother Church. So in response, Mrs. Eddy wrote, beloved brethren, it is conceded that our shadows follow us in the sunlight wherever we go. But I ask for more, even this, that this dear church shall be pursued by her substance, the immortal fruition of her unselfed love, and that her charity, which seeketh not her own, but another's good, shall reap richly the reward of goodness. End quote. How refreshing to think that the concrete result of unself love is substance. In fact, a substance that pursues us. So I hope that's helpful.
I'm looking forward to being pursued by my substance. It's an ongoing effort, Paul.
No.
Let me talk to you about the U.S. economic outlook. In a recent letter to clients, you mentioned that, quote, the prospect of recession globally in 2023 there is a prospect of recession as the bite from higher interest rates takes hold, unquote. And you also wrote that the level of corporate profits is vulnerable and that recession in the U.S. is widely anticipated, but not yet evident. Given all of that and the recent challenges to the banking system, we talked earlier about the possibility of a recession. Is that something that, as a practical matter, people should be planning for? And if so, what are the implications of that for managing a retirement nest egg?
Right. And this is the very appropriate question that many ask when it looks like we're in for some questionable economic times. Do I reallocate my portfolio in such a way to allow it to safely weather this potential storm? And so here's a statistic that will speak to maybe the futility of that effort. So over the decade from 2010 to 2020, the general stock market was up 190%. This is a chart of money funds. We don't need that right yet, but we'll get to that. That's very exciting. I know you're excited about that, Heidi, but you're going to have to wait. So in that decade of 2010 to 2020, the general stock market was up 190%. Now, if you tried to go in and out of the market during that period, and you missed just 10 days, the 10 best days during that 10 years, your return would have been only 95%, almost 100% less. And who can know when those 10 days are going to appear over a 10-year period? Thus the futility of trying to time the market or go in and out. Okay, so we need to resist this notion of trading. Stock market climbs a wall of worry, is the famous saying, and there's always walls of worry to be climbed. So that shouldn't be a reason for you to become too conservative and sell your stocks. You should keep a balanced portfolio. So one of the rules is you take your age, you take 100 minus your age. So let's say you're 75. So 100 minus 75 is 25. And that's the percent you should have in stocks. I think that is unwise. There's people that need to invest so that they can stay ahead of inflation. And that's not going to happen if you only have 25% in stocks. So be aware of that potential problem. And then let's go back to money market fund yields. Heidi, I'm making you work here. I can see that. So while Heidi's putting that up, the other ingredient to a successful portfolio is what's called a laddered bond portfolio. Finally, bonds give a decent interest rate after 10 years of almost nothing. So it's an opportunity for you to fill out a bond portfolio with treasuries or certificates deposited that mature every 6 months.
And Paul, when you say laddered, you're meaning bonds of varying maturities in your portfolio, so they come due at different times. Is that what you mean by laddered?
Yeah. Right. So they come due every 6 months or 9 months, exactly. And here is a chart of money market funds. So you can see that the current yield is 4.5%. It's close to 4% today, but it's much better than it was when we last got together in 2020, when it was close to zero. So my suggestion is you take money out of your checking account, which often is yielding close to zero, and you try to put it into a money market fund. And just be careful. There are many kinds of money market funds. I would stick to a US Treasury money market fund for safety. All right. Next question.
Okay, so the last time we met, Paul, there were questions from listeners about Mrs. Eddy's own management style. And I know you've done some research on that. As you know, in the church manual, Mrs. Eddy has things to say about the guardianship of church funds, including the well-known statement, God requires wisdom, economy, and brotherly love to characterize all the proceedings of the Mother Church. What guidance about investment can we gain from how Mrs. Eddy handled her own investments?
Yes. So I enjoy this story because when I spoke last time, someone asked me a question. I think it was an attempt to stump the speaker, and they were successful. They asked me the question, how did Mrs. Eddy invest? I did not know the answer. But I will say I was very impressed with your listeners, because I got my email was filled with the correct answer. So I have learned something, and I will pass that along to see if we can help here. It's actually a very interesting story how Mrs. Eddy invested, and it has to do with the Next Friends suit. During the deposition, she was asked in a test of her competency and acuity, how did she invest her money? And she mentioned quite a few years ago, she had bought municipal bonds, and she'd done her homework, which is a good rule for all of us. She didn't buy municipal bonds from very small cities or very large cities. Small ones had trouble with financial strength. Large ones had multiple problems that the medium-sized towns did not. And then they asked her how did she manage her money now? Because she obviously had quite a bit more than she did when she was first investing. And she said, well, of course, I have it professionally managed. Now, I think that's a paid political announcement on my part. I don't need to do that. But I will say it's important to listen to Mrs. Eddy. So we'll leave it at that with that a little bit of humor. So yeah, it is important to do your homework, and the stock market is so different today than it was in the late 1800s and early 1900s. It's much more heavily regulated. Bernie Madoff being the exception. It's embarrassing for the industry. But in general, we are much safer for investing than back then. So different investments are appropriate today, I would suggest.
So caution and professional advice when possible are sort of the two takeaways. Let me ask you about dealing with retirees' economic challenges. For people in the Willows demographic, which is currently residents between ages 55 and the century mark, there's often a feeling of having few ways to protect yourself when times are tough. You don't control how the stock market hits your investments. You don't control increased rents or food costs, and rising prices take a bite out of whatever interest you earn on your savings. So what would be your response to a retired person who says they don't feel in control of their economic situation?
Right. Yeah, I think a lot of people are asking that question. Well, first of all, if you have a well-balanced portfolio, you don't need to change it every time a recession is on the horizon, as I mentioned. So that's the first job, is to make sure you have a thoughtful, balanced portfolio between stocks and bonds that's appropriate for you. No one can tell you what that should be. But for the average conservative portfolio, it tends to be about 60% stocks and 40% bonds and cash. But you'll know what's right for you. And you should talk to your advisor about that, obviously. So sometimes people say, well, I'm going to wait and see if the market goes down, and that will tell me if we're headed for a recession. The problem with that is that the stock market has predicted, as they say, 8 of the last 3 recessions. So a lot of false notifications there. So yeah, it's important to have a steady course, not to try to be too clever, and to have a well-balanced portfolio.
Let me ask you another sort of more nitty-gritty question about outliving your resources. The one, and that's obviously a concern for older Americans. The Wall Street Journal recently ran a story with a cheery headline: "You might live longer than you think. Your finances might not." The journal advised knowing how many more years you're likely to live and the probability of living much longer than that, not exactly something you'd read about in the Christian Science journal. Do you have any insights on the concern about outliving your resources and practical steps an individual can take?
Sure. Well, the first thing is it's helpful to avoid these aggressive growth stocks that are in the news almost every day. They add risk to your portfolio, and sometimes they give you returns, but usually they give you a volatility that you would not want. So there's no reason why you can't have a conservative portfolio. If you look at historical norms over the last 70 years, if you had 60% in stocks and 40% in bonds, you would have a total return of about 7% per year, which with compounding means doubling every 7 years. So that's rather attractive. And my point is, there's no need to take the risks that many think they need to have a strong portfolio and stay ahead of inflation. The other thing is bonds offer some very attractive yields today. For the last 10 years, we've had almost 0% interest rate on bonds. So take a look at bond opportunities out there. Just be aware that if you go into long-term bonds, meaning 20-year maturities or 30-year maturities, you actually start incorporating a lot of risk, which is inappropriate. For example, US 30-year US Treasury notes last year declined 39.2%. Its worst year for US Treasuries, for those treasuries in many decades. And I've seen some argue it's the worst since 1790. Don't ask me how they came up with that. But the point is, it was a very bad year last year for bonds. The corollary is that now there's some really nice opportunities if you're investing in bonds today to get some better yields. Just be diversified with your maturities.
So we're going to turn now to audience questions. As Heidi explained at the beginning of tonight's program, members of our audience can send in questions for Paul using Zoom. Look at the question and answer button at the bottom of your screen. Click the button, write your questions, and hit send. Paul will respond to as many as possible during the time allotted for them. And I'm going to look at the Q&A box here and see whether what's happening. So while we wait for the audience to send their zingers to you, Paul, here's one from me.
Okay.
And that's about the so-called sin sector. Your firm offers the American Trust Allegiance Fund, a mutual fund offering a way for clients to participate in the stock market without investing in pharmaceutical, tobacco, and gambling companies. I should note here that the Willows is not endorsing any specific investment. That said, your website refers to the Allegiance Fund as, quote, growing your assets without compromising your values. So my question is, in your experience, do investors pay a financial penalty for avoiding investments in companies in the so-called thin sectors of the economy?
David, you can imagine we're always monitoring this. We track an index that we call the S&P 450. So it's the Standard & Poor's 500 index minus the stocks you just mentioned, pharmaceuticals, tobacco, alcohol, gaming. And we found that in certain years that S&P 450 will do better than the general stock market, and other years it'll do worse. But over any, say, 3 or 4 year period, the performance is highly correlated between the two. So we don't think you're paying a price. Now, an anecdotal piece of data is that last year in 2022, as David mentioned, the stock market was down about 19%, Standard & Poor's 500 down 18%. But the Allegiance Fund was down 4.4%. So don't get me wrong, we're not that brilliant. We don't outperform the market by such a wide margin every year. And it's a bit ignoble that we have lost money and still are saying we've done a good job. So I won't try to argue that either. But I think it's an example about you don't have to be hurt by not investing in pharmaceuticals, et cetera.
Is it your, to your knowledge, are the sort of sin-free investment portfolios, is that a large part of the mutual fund business in general, or is that sort of a niche for Christian Scientists and a few others who care about such things?
Right. So if you're looking for specific screens that we're talking about, alcohol, tobacco, gaming, pharmaceuticals, medical instruments, we're not aware of any other mutual funds that offer that. But the whole area of social responsible investing, DEI, which is diversity, equity, inclusion, there are many different names for it. They're very popular, which is a nice sign that people really are trying to do something meaningful with their investments, rather than just saying, I'm looking for maximum return. So I think that's wonderful. And it reminds me of, and just real quickly, this article by Margaret Rogers from April 23rd, 2001. And just keep in mind, that's when the stock market had dropped 50%. And it says, this is on trying to do something with your investments that's meaningful. treat investing as an opportunity to be grateful for and contribute to useful services, businesses that help improve human life in an ethical manner, can be seen as representing God's nurturing love for creation. Good investing isn't so much about multiplying money as it is about multiplying qualities such as kindness and integrity. And there are many.
I thought that was a
Yeah.
wonderful comment from Margaret, who, as many of you know, is a Christian Science practitioner and teacher in Northern California and a former member of the Christian Science Board of Directors. We got a couple of audience questions for which we're grateful. So here's an interesting one. What's the best way to pray when there doesn't seem to be enough money to cover expenses, but a great desire to invest?
Yes. I think speaking to that is this saying we have from John, this quote from John, which reminds us, say not ye, there are yet 4 months, and then cometh the harvest. Behold, I say unto you, lift up your eyes and look on the fields, for they are white already to harvest. To me, I don't think we are expected through our prayers to suddenly see fields blossom, but maybe that God's goodness is here now, providing what is needed, be that the inspiration to find good investment ideas or wisdom to avoid the emotions that create and exacerbate cycles in our lives.
Thank you on that. So here's a question regarding bonds. This listener asks, what are some examples of sound bond types?
Yeah. U.S. Treasury notes are solid. Just stay away from very long U.S. Treasuries. By that, I mean maturities over 10 years. If you're investing your own money, professionals can do certainly longer maturities because they know how to mitigate the volatility of those things. But as far as corporate bonds, I'd stick to what are called AA and AAA bonds. So these are well-managed companies that have high rating from Moody's and Standard & Poor's.
Let me ask you a somewhat political but nevertheless very interesting question. Do you think that oil and coal, fossil fuels, will eventually be included in the sin sector of the stock market?
Yeah. So that brings up a good point, and that is you need to follow your own highest sense of right here. And if to you certain sectors are inappropriate to or not to invest in those areas. So that's important for each of us to follow our highest sense of right. So I guess that's my best answer.
You would, and we're waiting for more listener questions. I've got one here from an old colleague of yours from Boston here. You advise a number of Christian Science philanthropic organizations on their investments. And as you know, Mrs. Eddy was a big fan of philanthropy, writing in Miscellany that philanthropy is loving, ameliorative, revolutionary, wakens lofty desires, new possibilities, achievements, and energies. It lays the axe at the root of the tree that bringeth not forth good fruit. It touches thought to spiritual issues. She was obviously a big fan. Why do you think that the topic of philanthropy deserves attention? Why was she such a fan?
Yeah. Well, think of that branch church mentioned earlier that gave their entire building fund to the mother church. I would say they were true philanthropists. They didn't give of their excess, but I would suggest gave of their substance, unselfish love. as Mrs. Eddy refers to it. And in return, as Mrs. Eddy wrote, they shall reap richly the reward of goodness. Of course, that's not why one is philanthropic, but it is an opportunity for us to express our God-given unselfishness. And that's an important part of expressing substance.
And you also mentioned in a conversation we had getting ready for this that you have clients asking what's their responsibility in terms of finding worthy recipients. Is that, you want to talk a little bit about that?
Yes, I think it's lovely that clients want to talk about that and think what they can do. Fidelity Investments actually has a whole division that does nothing but set up private foundations for individuals. So a lot have taken advantage of that. It is an opportunity for us to broaden our tent.
I'm about to read our last question. Our apologies to those who sent a question that Paul didn't have time to answer. This one comes from a listener. The listener says, Paul, there's a big push to invest in precious metals, gold and silver. What's your view of that?
Right. Well, in an inflationary environment, which we seem to be right now, the investment in commodities can be important, but there are a lot of ways to invest in commodities through, well, oil, materials, and gold and copper are some of them. The problem with gold investing is it kind of has a life of its own that seems to be independent of the demand for gold. So it's sort of an unknown as to whether it'll do well or poorly, even independent of inflation. Often it moves in unexpected ways. And therefore, for many portfolios, it's inappropriate because of its risk.
Yeah. And silver, does that fall in the same category, Paul?
Correct, falls in the same category. If I might, just before we close, I love that question from one of your listeners about just how do we expand our sense of well-being, even in time of difficult stock market. And I love the story about Elijah when he was sent to Zarephath. And as you'll recall, he was sent to a widow woman, and he asked, for some food, and she said, "No, I have nothing. I just have a small cruse of oil and a barrel of meal, and that's all. And we're going to have one more meal, and we will be out of food." And Elijah said, "Okay, but make me a cake first." So that's a wonderful example, I think, to all of us of what do we think is possible in difficult times, and are we showing our devotion as the widow woman did? She showed that she truly wanted to believe that the man of God was one that she should obey. And so then the famous quote, the barrel of meal wasted not, neither the cruse of oil. So I think that's good for all of us to remember in these challenging times, the omnipotent power of God to provide care for all of us.
Thanks to Paul. Thank you, Paul. Thanks. We thank him for his inspiring responses to our questions, and also for his willingness to submit the questions at the end of the day on the East Coast. If you want to see a replay of today's interview, it'll be available under the events tab on the Willows website, which is www.thewillowscommunity.org. And now let me turn the program back to the Willows Executive Director, Steve DeWin. Thanks again, Paul.
Thank you, David.
And now we'll wait, never doubting, for Steve. There he is. We can't hear you, Steve. We need a We need your mic.
Okay, I think I'm back now, totally.
Yeah.
Thanks to everyone who worked on this event. Thanks to Heidi for running Zoom and pulling together all of the logistics. Thanks to Devin for being her backup and cheerleader and promoter. Thanks to Dave, of course, for continuing to serve as the best interviewer I've ever seen for this entire series. Thanks to Deanna for working on the marketing. And mostly, thanks to Paul for giving us wonderful insights into seeing this economy as operating under the law of God, not under the law of economics. So watch out. Oh, let's see. And if you want, we're going to put Paul's contact info up, I've been told, shortly or soon, or maybe it's already up. Oh, there it is. Thank you very much. And for everyone else, we'd like you to watch out for an announcement for the next installment of the Thinking Forward series, which will probably be about 2 months or so. With that, I bid you all farewell and have a good night. Thank you.